Good afternoon, my name is Jordan Lambert, market analyst at Gelatama Management. Gold continues to climb higher following its breakthrough 1300 resistance at the market open this week, and it has been supported by disappointing US existing home sales yesterday. So far gold has reached a high of 1339.25 despite US equities continuing to make new all-time highs. Recently, gold has benefited from Ben Bernanke refraining from giving a specific timeline for tapering. To the market, this has implied that the US economy is not yet improving at the rate it needs to in order to reduce QE. Also, we have gold miners cutting back on production recently since the market reached a low of 11.79 in June, and this has provided a supply squeeze and lifted prices higher as well. Now, let's just take a look at the daily chart. I'm drawing a new bearish trend line now. I mentioned that in my yesterday weekly report that the long-term bearish trend line was broken like so. Just as 1300 resistance was broken as well, and that is attributed to the incline in prices we've seen this week. But now we've got to forget about that trend line, and if we can, draw another trend line to see where price may find the next level of resistance. And by connecting April's high and May's high, we can draw a trend line, and price is currently intersecting with this trend line right now. So we could see a bit of a pullback. In my weekly report yesterday, I did mention that now the previous trend line had been broken. A feasible target level, especially for position traders, would be 1385, and that is still applicable, but it's not going to go up to 1385 in a straight line. There will be pullbacks. It will be probably quite a rocky road along the way. So I just think this is a possible pivot trade opportunity to short, because we have a bearish trend line resistance, and we also have former support now turn resistance at 1337, which price is almost sitting on right now. So in May, 1337 was a support level. It eventually gave way to the bears in June, and now when the market retraces, former support levels then act as resistance. So price is interacting with a resistance level now and a bearish trend line, and also we have Bollinger bands. It's intersecting with the upper Bollinger band, which is more resistance. And then if we add the stochastics indicator, we can see that it's overbought. Yep, the stochastic indicator can give a lot of signals that don't materialize to successful, profitable trades. But the important thing about this indicator at the moment is it's been in overbought territory for several days, which indicates that it's even more likely for the market to reverse. And bear in mind, we still are in a bear market, and for it to be overbought in a bear market is quite good for people looking to short. So we have several resistances here. The price intersecting with a long-term bearish trend line, which is different to the one that was broke at the beginning of the week. We have former support at 1337 now acting as resistance, and price is intersecting with that. We have the upper Bollinger band resistance, and stochastics is overbought as well. Today is very light on the economic data, but do be aware we are in the middle of the earnings season, so corporate results could impress or disappoint investors and move this market that way, so just be aware of that. Thank you very much for listening to me, and I'll speak to you again soon.